So you go to apply for a loan and you think you're in great shape. You've got great revenue, great sales numbers. You think this loan is an absolute slam dunk. But then you get the rejection letter in the mail and you wonder, what happened? My sales were great. My revenue was great. Why are they rejecting me? And it could all come down to one single report, which is the AR aging report. So before we get started, I'm not a CPA, so always be sure to check with one for any tax or financial advice. But today we're talking about the AR aging report and why it can make or break you when it comes to a loan. So what is an AR aging report? Well, it breaks down your accounts receivable into different buckets from, say, like 1 to 30, 31 to 60, and 61 to 90, and 90 plus days. Some people break it down in different ways than that, but it's just kind of a graph showing where your sales revenue is and how long before your customers, or basically the length of time before your customers have actually paid in for that revenue or the sales that you've actually made. So you might look at this graph and you see like all this great sales revenue waiting to come in cash, but a lender that's looking to give you a loan, they see a risk because that money is not actually in your bank account. That's money that your customers owe you and your customers are using to basically get a loan from you. So what are some of the risks that these lenders look for when it comes to this? Well, one thing is the 90-day pileup. So just like a ton of customers with that haven't paid you in 90 plus days. So that is one big red flag. Another big red flag is customer concentration risk. And that's where your accounts receivable is all piled into like one customer. So one big customer owes you like a huge amount of money and they haven't paid that in like a substantial amount of time. And a lender might look at that and say, well, what if that one customer doesn't pay? What if that one customer disputes that? Then you have no cash flow coming in. You don't have money in order to pay the loan that you took from them. The other one is the slow pay trend. That's another risk that lenders look for. And that's another where you have a substantial amount of customers that are kind of piling up in that plus 30-day range. So where a customer is supposed to pay you in that 30-day range, maybe that stretches to 40, 45 days, 60. So again, your customer is basically getting a free loan from you. You're not enforcing your payment terms. You're not able to take that cash and then pay off your loan. So what can you do? Well, one thing is you can write off debt that's greater than 120 days old. If you know for sure that a customer is never going to pay you after that 120-day mark, you need to write that one off. Another one is to audit and enforce your terms. You have to make sure your customers are paying you on time. And one thing you can do to do that is just send automated reminders. That takes someone having to pick up the phone and make a phone call, takes the awkwardness out of it if you just have it automated and you don't have to do anything about it. The auto reminders just keep going out. Another thing you can do is consider giving a 1 to 2% discount for customers that say pay you within 10 days. So one of the big sayings are sales are vanity, profit is sanity, and cash is reality. And that's one big thing that lenders actually go by and they take very seriously. I can tell you that the company I work for, they take this report very seriously. If this report goes down, it's not working, definitely hear about the report and need to get it back up and running because everybody wants that report. So you should take that report seriously too. And before you even are able to make that report, we'll take a one step back. Your numbers to make that report have to be good. So that means your QuickBooks need to be good. So if you do need a bookkeeper, I am a certified QuickBooks ProAdvisor, and I can help get your books in order so that you can actually make the AR aging report and use it to your advantage and enforce your payment terms and turn that sales revenue into actual cash. Thanks for watching, and we'll see you in the next one.